starting our first webinar. We're talking about financial market literacy one, and here we'll be giving you a breakdown about the financial market, what you need to know to be a perfect trader, and we'll be having in-depth analysis about what is Forex, the origin of Forex. We'll be talking about Forex trading sessions. We'll be talking about a whole lot of things which you need to know about trading on the financial market. So let's kick off. Next page. Right. Now, we probably might be wondering what is the foreign exchange market, what is Forex? Now, the foreign exchange market, which is also known as Forex or FX, is the largest financial market in the world. And this market boasts of a $6.6 trillion a day trading volume compared to the stock market, which is $22.4 billion trading volume. And this is to tell you that a total of $6.6 trillion is what comes into the market, the foreign exchange market, every day. Now, you should understand that this is a whole sum of money. And of course, it's not just one person who participates in this market. It's a lot of people who participate in this market. And it's a very joyous market, of course, because a lot of people come here and make millions and millions because, of course, you can see it's a $6.6 trillion market. So people come in, get their testimonies, make multi-millions from this financial market. So it's a very productive market for everyone. And any young or old trader aspiring to make millions from this market, so for sure a way for you to make a lot of money from the financial market. Next page, please. Now, a common question that's been asked is, what is usually traded in this financial market? The simple answer to this is money. You know, a good number of you all be wondering what is being traded on this seemingly large market. The simple answer to this is money is what is being traded. For example, in Forex trading, when you say you buy a Japanese yen, you're basically saying that you're buying a share in the Japanese economy because you're betting that the Japanese economy is doing well and will even get better as hopefully you will end with profit. Hopefully you end with profit. Now, when you in general terms, what we're trying to say is this: the exchange rate of a currency to another currency is the total reflection of the condition of that country's economy compared to other countries' economies. So we should understand that Forex is simply the simultaneous buying and selling of currency pairs. The object of Forex trading is to exchange one currency for another in expectation that the price will change so that the currency you bought will totally increase in value compared to the one which you sold. Hint to this: what is being bought or what is being sold is just money. That is a simple hint about Forex. You trade your money and you make more money. Next page, please. Now, we are talking about top notable Forex earners in Africa. We have some of them like Sandile Shezi, who's accumulated wealth from business opportunities, of course, a real icon for potential traders in the Forex world. Next page, we have John Garty, a Forex robot trader. Next page, please. Forex trader who, of course, owns his own Forex robot. And, you know, he has gained fame from around the world by, you know, maximizing his talents from computer sciences to make robots that, you know, trade the financial market for him. When he's asleep, can still make money while sleeping, and, you know, things like that. John Garty, of course, is a top earner in Africa and a real icon for potential traders in the Forex world. Next page, please. We have Q Banks, a Jamaican-born Forex guru who owns an academy with lots of partnership deals to his name. Jamaican-born guru trader Q Banks is, of course, he's been a top-notch inspiration for most traders all around the world. Who owns his own academy, and, you know, he has a lot of deals signed to his name. This, of course, is to let you know what the Forex market can, of course, do for you. Next page, please. Now, we have what we call the major currencies in Forex. The big question here is, what are they? Now, if you look to the extreme left here, you see the symbol, you see the country, you see the currency, you see the nickname. The symbol, we have the USD, you have the euro, we have the JPY, we have GBP, we have CHF, we have Canadian dollars, we have AUD, we have NZD. And then we have the country, the currency, and the nickname. Now, for the United States dollars, you have currency and the nickname, the buck. While for the Eurozone member, we have the currency, the euros, and the nickname, the fiber. The JPY, the Japanese yen, we have the nickname for it to be the yen, while the Great British pound, the cable, the Switzerland franc, the Swissy, the Canadian dollar, the loonie, the Australian dollar, the Aussie, and the New Zealand dollar, of course, we have the Kiwi. So these are the major currencies which you should know in Forex, and these are the currencies and their nicknames. Your nicknames, because you might come across them in Forex websites for you to better understand what they're talking about. Most of these websites use their nicknames to represent them. So when you get to see these nicknames, you clearly understand what symbol, what country, and what currency they are referring to. Next page, please. Now, the first currency symbol, NZ, stands for the country, while the currencies, the currency, of course, I mean to say, stands for the currency being traded in that country. So NZ stands for the country, the country's acronym, while the D stands for the country's currency, which is being traded in that country. So when you see something like USD, it means the United States dollars. When you see stuff like JPY, it means Japanese yen. And every other currency pairs that you come across, you should just understand the first two acronyms symbolizes the country's name, while the last one symbolizes the country's code. Now, next page, please. Same way we have major currencies, we have major currency pairs. A little understanding to this is that when you see any currency pair being paired with the United States dollars, that currency has the USD being paired with it. It's a major currency pair. Take, for instance, you have the Euro USD, you have the USD JPY, you have the GBP USD, you have the USD CHF, you have the USD CAD, you have AUD USD, you have NZD USD. One thing you should see that is in common with all these currency pairs is that they have the United States dollars in common with each and every one of them. So Euro USD, USD JPY, GBP USD, USD CHF, USD CAD, AUD USD, NZD USD. So they have one thing in common, the USD, which makes it a major currency pair, of course. Next page, please. The dollar, is no news that the dollar is the king in the financial market. Now, you must have noticed how much people keep mentioning the United States dollar. It's because it comprises about 75% of all trades. USD is one half of every major currency pair. It's a must pay attention to. Every customer pays attention to the USD. Every bank, every country, they pay attention to the USD because the USD is king. In fact, according to the IMF International Monetary Fund, the US dollar comprises roughly 62% of the world's official foreign exchange reserves. And because almost every investor, business, and central bank own it, they pay attention to the United States dollars. And this to give you a hint that the USD, of course, is top tier, is number one when it comes to trading on the financial market. Next page, please. Now, when we talk about minor currency pairs, we're looking at euro crosses. We have other crosses though. We have yen crosses, we have GBP crosses. The minor currency pairs, we have Euro CHF, we have Euro GBP, we have Euro CAD, we have Euro AUD, we have Euro NZD, we have Euro JPY. One thing in common with these pairs is that they have the crosses in them. They have the Euro Chef, you have the Euro GBP, you have the Euro card, you have Euro AUD, Euro NZD, Euro JPY, of course. Now, one thing to know is this: when you see every pair that has is still under the category minor currency pairs. Next page, please. Now, let's talk about the yen crosses, still under the category of the minor currency pairs. For instance, you have Euro JPY, you have GBP JPY, we have Chef JPY, we have Card JPY, we have AUD JPY, we have NZD JPY. One thing in common with them is the Japanese yen. That is one thing in common with each and every one of these crosses, the Japanese yen. So that is to tell you that this Japanese yen is being paired with every other currency pair apart from the USD. You will not find the USD here, which makes it a minor currency pair under the category of the yen crosses. To the next page. Now let's talk about the pound crosses. The pound crosses comprises of the GBP with every other currency pair apart from the USD, Chef, GBP with AUD, GBP with card, GBP with NZD, nothing like GBP with USD, nothing like GBP with any other currency pair. Just GBP with these four currency pairs you see here under the category of the minor currency pairs. Next page, please. Other crosses. Under the category AUD Chef, AUD card, AUD NZD card, Chef, NZD card, we see this, we call this the other crosses because you cannot find the euro here, you cannot find the Great British pounds here, you cannot find the Japanese yen, you cannot even find the United States dollars. Instead, you find every other currency pair we have listed here. Now, the reason why we put it this way is because when you have your MT4, you have different folders that characterize or categorize each and every currency pair under the majors, under the minors, under the crosses, and the rest of them. So this is under the category called other crosses. You find AUD Chef, you find AUD card, AUD NZD card Chef, NZD Chef, and NZD card, of course. To the next page, please. To the next page, please. Now let's talk about the exotic currency pairs. Now, depending on what reason, we suggest Ztradex, of course. You may be seeing a lot of exotic currency pairs, but you should keep in mind that these are not usually majorly traded with, like the majors or the crosses. The currency pairs you come in different transaction costs based on the spreads. We have USD SGD, USD HKD, USD DK. Depending on whichever you want, it means that the United States dollars and the Singapore dollars are not one exotic currency pair. USD and the South African rand, USD and the Thailand peso, USD and the Hong Kong dollar, while the USD and the Danish krona, USD and the Swedish krona, is also the USD and the Norwegian krona under the category of exotic currency pairs. Next page, please. Now, one thing about exotic currency pairs is this: they usually carry what we call high spread charges. And it all depends if your broker offer them, they can train them. So if you want to exotic currency pair, remember to factor them in your decision. Always remember to factor them in your decision, very importantly. To the next page. Forex trading is the simultaneous buying of one currency and selling another. Currencies are traded through a broker or dealer and are traded in pairs. For example, the euro and the US dollar, or the British pound and the Japanese yen. When you trade in the Forex market, you either buy or sell in currency pairs. Forex trading is simply the simultaneous buying of one currency and selling others. For example, I have Euro USD, I have GBP JPY. I buy Euro, I sell USD. I buy GBP and I sell JPY. And this is just in a layman's definition, a better way for you to understand this. You buy the base, you sell the code. As simple as that. The next page, please. A very important thing to note about the Forex market, it's all purely based on speculation, which means that a trader in Japan or trader in Norway or trader in England or any country can understand the market based on what? Speculation. No one totally owns the market. That's what we're trying to let you know. It's all based on what happens in the market. It's based on the moves that are being made. It's based on what every trader is thinking at different locations of where they're based in. So the scale of the Forex market means the liquidity, the amount of buying and selling volume happening at any given time is extremely high, which makes it very easy for anyone to buy and sell currencies. For instance, I want to buy the pounds and I feel that GBP USD, I feel that it's going to go on a buy. I'm a trader based in Kenya. Meanwhile, another trader based in the UK is feeling that it's going to be a sell. Meanwhile, somewhere else in Brazil, another trader is thinking that it's going to be a sell. So this is just to tell you it's all purely based on speculation. No one knows exactly where the market is. Everyone's just hitting different buttons for buy or sell, depending on the sentiments and depending on their speculations of where the market might be heading to. To the next page, please. Advantages of Forex trading. Number one, we have no middleman. Spot currency trading eliminates the middleman, allows you to trade directly with the market responsible for the pricing on a particular currency pair. No fixed lot size. In the futures, we have lots of contract sizes are determined by the exchanges. The standard size contract for silver futures is 5,000 ounces. In spot Forex, you determine your own lot or position size. This allows traders to participate with little or amount of $25, although we might explain what it is all about later now. Low transaction cost, typically less than 0.1% under normal conditions. At larger deals, the spread could be as low as 0.07. Of course, this depends on your leverage, and we will explain what leverage is to you later on. It's a 24 hours market, which means that no waiting for the open bell from the Monday morning opening in Australia to the afternoon close in New York. The market never sleeps. It's awesome for those who want to trade on a part-time because you can choose when you want to trade, be it the morning, be it the afternoon, be it the night during breakfast, or even in your sleep. These are some of the advantages of the financial market. No middleman, no fixed lot size, low transaction cost, and of course, it's a 24 hours market. To the next page, please. Now, we have what we call Forex market players. We are looking at big guys, top world banks, government, large commercial companies, central banks. You know, the initial requirement was that you could trade only if you had about 10 to 50 million bucks to start with. Forex was originally intended to be used by bankers and large institutions and not by little guys, of course. However, because of the rise of the internet, online Forex brokers are now able to offer trading accounts to retail traders like us. So based on this analysis, We have top world banks, we have government-led commercial companies, central banks, and the rest of them like that. The initial requirement was that you can only trade if you had 10 or 50 million, but now it's different because you need to go down even to $10, $6 because of the invention of online forex brokers like Zitrodex. And you can make money with as low as $10, even come in more, maximize your profit and make more money. These are some of the perks of what you gain from trading with Zitrodex and of course the forex market players. To the next page, please. Let's take a look at some of the top world banks. We're looking at banks like Barclays Capital, a top world bank, Deutsche Bank, Citigroup, UBS. You could say that interbank market is the foreign exchange market, of course. It is this bank that determines the exchange rates based on the supply and demand for currencies. They are generally the ones that make the bid and the ask spread that we all love or hate for that matter. Now, top world banks are top banks like the Barclays Capital already mentioned, Deutsche Bank and Citigroup, US, UBS, Switzerland. Next page, please. Now we talk about large commercial companies, companies that take part in the foreign exchange market for the purpose of doing business. For instance, Apple must first change its US dollars for the Japanese yen when purchasing electronic parts from Japan for their products. Since the volume they trade is much smaller than those in the interbank market, this type of market player typically deals with commercial banks for their transactions. So that is how a lot of currency conversations that happens that could move, prices around. Large commercial companies, US dollars for the Japanese yen. We have Apple, we have Amazon, a host of them like that. These are people who participate in trading on the financial market. To the next page, please. Governments and central banks such as the European Central Bank, the Bank of England, and the Federal Reserve are regularly involved in the forex market too. Just like companies, national governments participate in the forex market for their operations, international trade payments, and handling their foreign exchange reserves. Meanwhile, we have central banks which also affect forex market by adjusting interest rates to control inflation. By doing this, they can affect currency valuation. There are also instances when central banks intervene either directly or verbally in the forex market. When they want to realign exchange rates, sometimes central banks think that their currency is priced too high or too low, so they start with massive sell or buy operations to alter the exchange rates. To the next page, please. This is probably the mantra of the speculators, comprising close to 90% of all trading volume. Speculators, as far as market players, come in all shapes and sizes. Some have fat pockets, some roll thin, but all of them engage in the forex simply to make bucket loads of cash. These are what speculators do. They come in different shapes and sizes. Some come in $1,000. Some come in a few couple of dollars, $10. Some come with $100,000, $100,000, $1 million, $2 million, $10 million, and the rest of it. They are all called speculators. Next page, please. Now, in the past, only the big speculators and highly capitalized investment funds could trade currencies. But thanks to retail forex brokers and the internet, this isn't the case anymore. With hardly any barriers to enter, anybody I say can just contact the broker, open up an account, deposit some money, and trade forex from the comfort of their own home. Brokers basically come in two forms. One, the market makers. As their name suggests, they make or set their own bid and ask prices themselves, and also ECN, who use the best bid and ask prices available for them to be able to, make different institutions on the interbank market. The next page, please. Yeah, we have what we call forex trading sessions. Very importantly, we're taking an overall look of the 24-hour day in the forex market. You can make money trading when the market moves up, and you can even make money when the market moves down. but you have a difficult time trying to make money when the market doesn't move at all. So here is what a 24 hours day in the market world looks like. To the next page, please. Now, when we talk about open and close, this is more like the time when the banks open in different countries. We are looking at Sydney first, Australia. Now, we're looking at 5 major trading sections: the Sydney session, the Tokyo session, the London session, the New York session, and the European trading section. Now, the Sydney session, 6 p.m. to 10 p.m. EDT GMT, while the Sydney close is 3 a.m. to 7 a.m. 3 a.m. and 7 a.m. GMT. So these are more like when the banks open and close in this country. So EDT, we have 6 p.m. to 3 a.m., while GMT, 10 p.m. to 7 a.m. For the Tokyo open and close, we have EDT 7 p.m. to 4 a.m., while GMT 11 p.m. to 8 a.m. For the London open and close, we have 3 a.m. to 12 p.m., and GMT we have 7 a.m. to 4 p.m. For the New York open and close, we have 8 a.m. to 5 p.m., and GMT we have 1 p.m. to 9 p.m. For the European open, we have 3 a.m., and GMT we have 7 a.m. The next page, please. Now, we also have what we call naturally, we have busy times during the market. You can see in between each forex trading session, there's a period of time where 2 trading sessions are open at the same time. For example, we have 8 a.m. to 12 p.m., the London session and the New York session overlap. Naturally, they are the busiest time during the trading day because there is more volume when 2 markets are open at the same time. So what to understand is this. We have what we call an overlapping session. These are usually the busiest sessions in the forex market, where a lot of volatility happens and a lot of chances to make money. Next page, please. The best times to trade is this overlapping periods. Major news events come out to potentially spark volatility and directional movements. But then we also have the worst times to trade. For example, we have Sundays, everyone is sleeping or enjoying their weekend. Fridays, the liquidity dies down during the later part of the Euro session. Holidays, everyone is taking a break. Then we have the major news events when you don't want to get whipsawed. Major news events are times when people should take caution when trading. You can avoid the news at that point, or you can just follow the direction of the news if you know correctly where it's going to be heading to. Worst case scenario, just leave it till after the news, then you can continue trading. Next page, please. How to read a forex code. Now, we said this earlier, we have, for example, Euro USD. The base currency is the basis for the buy or sell. If you buy Euro USD, that simply means that you are buying the base currency and simultaneously selling the code currency. In caveman talk, you buy Euro, you sell USD. You will buy the pair if you believe that the base currency will appreciate or gain value relative to the code currency, and you will sell the pair if you think the base currency will depreciate relative to the code currency. Next page, please. Now, some common forex terms in trader stock. When you say you want to buy a currency pair, it's like saying you want to go long or take a long position. Likewise, when you want to sell a currency pair, it's same as saying you want to go short or take a short position. These terms are commonly used in the forex trading analyzing websites. So when you come across them, you understand what they mean. You have the long bullish uptrend. They all mean one thing: to buy. We have the short bearish downtrend. To say they all mean one thing, which is to sell. Next page, please. The next one. The bid and the ask. The next one. Yeah, this one. The bid and the ask. All forex codes are quoted with 2 prices, the bid and the ask. For the most part, the bid is lower than the ask price. The bid is the price at which your broker is willing to buy the base currency in exchange for the code currency. Right? This means that the bid is the best available price at which you, the trader, is willing to sell to the market. The ask price is the price at which your broker will sell the base currency in exchange for the quote currency. This means the ask price is the best available price at which you will buy from the market. Another word for ask is the offer price. Next page, please. Margin. Margin trading is simply the term used for trading with borrowed capital. This is how you're able to open positions worth acquiring over $1,250 or even $50,000 positions with as little as the $25 account or $1,000 account in your trading balance. What we're trying to let you know is that you can conduct relatively large transactions very quickly and cheaply with a small amount of initial capital. Next page, please. A PIP. You've probably might been hearing about PIPs and PIPET being used by Forex analysts. A PIP is the unit measurement made by a market price move. For example, you have Euro USD move from the price range of 1.26757 to 1.27757. We can see, of course, that the market made a price move of 100 pips. How is this being calculated? We have 1.27757 minus 1.26757, which gives us 1,000. But as you can get, we get rid of the last zero, leaving it at 100. That is to say, the last digit is being neglected. This last digit being neglected is called the pipette, leaving you with 100, making it 100 pips from that move. Next page, please. Most currency carries 5 digits after the decimal point. We have Euro USD, GBP USD, USD CHF, AUD USD, except the JPY pairs. The JPY pairs carry 3 digits after the decimal point. And we have, for example, we have AUD JPY, USD JPY, etc. All JPY pairs have the last digit after the decimal at its pipette value. Next page, please. What is a lot size? A lot size is the amount of contract sizes used in entering a trade. Back in the days, since only banks were allowed to trade Forex and considering the fact that big money was being put into a trading, specified contract lot size was being used, which is the standard lot size 1.0. But with the invention of Forex brokerage firms and other small-scale business enterprises who want to participate in the Forex market, the use of other lesser contract lot sizes was implemented. These lesser contract lot sizes ranges from mini lot size 0.10 to micro lot size 0.01. Next page, please. So that is to let you know that contract lot sizes have a deciding factor in account balances. You can place a trade with a standard lot size of 1.0 when you have an account balance of $100. Rather, you will stick to 0.01 or 0.10 contract lot size as part of having a proper risk and money management. Next page, please. Forex market orders. We have various types of Forex orders. First, we talk about a stop loss. For example, you're in a trade and the market price input whereby you gauge your risk to reward ratio in case of a turnaround of the market. Such orders can be implemented when you're not available to watch your running trades. And supposedly you're running a loss in your trade. Once it gets to the stop loss price input, automatically it wipes you out to save your balance. Similarly, we have the take profit order. This is simply the complete opposite of the stop loss order. You just have to impute the take profit price point when you're making a market execution and you feel you won't be there when the trade is running. Automatically, when the take profit price point is reached, it closes the trade and helps you secure your profit. Next page, please. A limit entry is an order placed to either buy below the market or sell above the market at a certain price. For example, Euro USD currently trading at 1.2050. You want to go short if the price reaches 1.2070. You can either sit in front of your monitor and wait for it to hit 1.2070, at which point you would click a sell market order. You can set a sell limit order at 1.2070. Then you can walk away from your computer or phone and carry on with other things. If the price goes up to 1.2070, your trading platform will automatically execute a sell order at the best available price. You use this type of entry order when you believe price will reverse upon hitting the price you specified. have gotten to. Now, we also have what we call the trailing stop or break even. It's a type of stop loss order attached to a trade that moves its price fluctuates. Let's say, for example, you place a trade on USD JPY and the trade happens to be in profit after some time. You can put a trailing stop or stop trade by changing your stop loss close to where the market price is currently running at. So then you save yourself the risk of losing accumulated profit. Next page, please. The stop entry order is an order placed to buy above the market or sell below the market at a certain price. For instance, we have GBP USD, which is currently trading at 1.5050 and is heading upwards. You might believe that the price will continue in this direction, or if it hits 1.5060, you can do one of the following to play this belief. Either you sit in front of your computer and buy the market when it hits 1.5060, or you set a stop entry order at 1.5060. In summary, you can use the stop entry orders when you feel that price will move in one direction. Next page, please. Now, before you can come into a trading on the financial market, it's always ideal to make sure you demo trade. Make sure you put all your trading into practice, first with a demo account, then you can now start a live account with ZeTradex. Next page. We're talking about support and resistance now. Now, one usually used strategy is the support and resistance strategy in Forex trading. Not everyone seems to have an idea of what it's all about, but you should be able to measure up the Forex support and resistance. A move zigzag upwards, an upward move, and then a retest before a pushback up to the upside, and then a retest. Every retest that happens creates a support. That's the best way to understand it. And every push up that happens creates a resistance. So the market, the financial market, doesn't just go directly at the go. It moves in this support and resistance. It makes breaks, and these breaks that happens create support and resistance zones. Next page, please. Now, as the market continues going up, the lowest point it reached before it started back now becomes a support, which is what we have been saying. In this way, resistance and support are continually formed as the market oscillates over time, and the reverse is same for the downtrend. Next page, please. One thing to remember is that support and resistance level are not exact numbers. They are zones, and they are mainly seen as price rejection points by market players or players. And oftentimes you will see a support or resistance level that appears broken, but soon after find out that the market was just testing it. Now, you using a candlestick chart, this test of support and resistance are usually represented by candlestick shadows. Previous support can turn out to be a new support or resistance at a later date. Is to tell you that the market never forgets. It always remembers previous support and resistance and recognizes them. Sometimes market prices test the support or resistance zone and try several times to break through it before it's eventually broken either through much buying pressure or selling pressure, while at other times it just bounces off the support or resistance zone and continues towards the direction it came from. Next page, please. Notice how the shadows of the candle tested the 1.4700 support level. At those times, it seemed like the market was breaking support, but in the real sense of it, it was just testing to see if it was going to be able to break out of the previously made support. Now take a look at this double whammy. You see market tested twice. Notice how the shadows of the candles broke past before the support and end up closing it before then retracing back to the above. Now supports can test a series of times and then finally not break out and then just move on back to the position where it had come from. Next page, please. How would you know if a support and resistance was truly broken? Some might say that support and resistance is broken if the market can actually close past the level of support or resistance. However, you find that this is not usually the case. You're seeing a lot of breakdown. You're seeing a sell position, a breakout from that support, but finally it didn't make its way down after the breakout. But then what happens? A retracement back to the upside. Now, if you had thought that was going to make a sell, you should know that that was obviously a fake out. Fake outs usually come in very long candles, try to test the support, make it look like it's about to break out, but then a retracement happens immediately. Next page. If you had believed that was a real breakout and sold that pair at that point, you probably would have lost out on that trade. But then if you take a clear look at the chart and come to the conclusion that the support was not actually broken, it is still very much intact and now even stronger, will help you understand these false breakers. That's why I made mention initially that you should think of support and resistance more as zones rather than concrete numbers or price points. Support and resistance level make a true breakout when series of candles have been created past zone which it was being held as support or resistance. This can also be used as an entry strategy in making good profits. Support and resistance are very important values when it comes to trading. It helps you understand your entry point, know when to take your profits, and the rest of it like that. Next page, please. Another interesting fact about support and resistance, when the price passes through resistance, that resistance it passed through could potentially become a support. And the more often price tests the level of resistance or support without breaking it, the stronger the area of resistance or support is going to be. When the support or resistance level breaks, the strength of the follow-through move depends on how strongly the broken support or resistance has been holding. Next page, please. Now, take for instance a move to the upside. Major resistance tested many times. We have minor support. The upside, major resistance tested several times. That's to show you what major resistance look like, what minor resistances look like, what minor supports look like. Minor support, a strong support, what a minor resistance looks like, and what a major resistance looks like. So that's what you see in the diagram above. Next page, please. With a little practice, you'll be able to spot out potential for support and resistance areas. Supposing you're in a big sell market or the downtrend as it's called, I usually repeat this in every mentoring session. You never anticipate the market, rather you participate in the market, because just the same way you think when you see a market move, you join it. The same way other traders are doing the same. Nobody sells from the top of a trendy market, rather they wait to confirm the move before they jump into the trade. This is called participating in a market trend rather than anticipating it. Now for the uptrend, we've seen a series of higher highs and higher lows. And the downtrend, we see a series of lower highs and lower lows. This is just how the market moves based on uptrends and downtrend. We also have what we call the sideways trends, a move in a zigzag manner. People buy when there's a sell market and they sell when there's a buy market. Next page, please. Breakout trading strategy for support and resistance. In a trending market, for instance, a currency pair is running through on a strong sell, downwards or strong buy upwards. Then you notice a pullback happens. The pullback means that allowing buyers or sellers, depending on the trend, to have a little share of the market move. If you notice, most of the times, the pullback creates a support or resistance, as the case is, and bounces back towards the initial trend. In such situations, the best strategy to use is wait for the pullback to happen. Then when it's coming right back towards the initial trend, it tends to break the minor support already created during the pullback. Once the candlestick break past that support, then you make an entry. This, of course, is a very reliable winning strategy. Next page, please. During ranges, based on the support and resistance level, you buy when there is a sell market looking for a reversal, and you sell when there is a buy market looking for a reversal. How will I know if the market wants to change direction? You simply just go to a higher time frame, look for a test phase. The test phase is very important. It's the last time when sellers or buyers make an attempt to buy or sell. Depending on the trend, then you watch out for a breakout from the zone, either upwards or downwards. Next page, please. So I think we wait for our next class, the financial market literacy 2. How to start trading with ZTradex. Next page. You go to the website ztradex.com, you click on open an account, and you see the registration form. You fill all necessary information and wait for confirmation of successful registration on the site. Next page. If you create your account and open, you click, you choose your account type, be it the ZTradex standard account or the Z Pro or the Z Ultra. Next page, please. Check your email and click on your dashboard. Select dashboard. You can also enter your email address and password to access your ZTradex account in an email. Next page. Registration of additional account. If you want to add a different account type, you can click the open new account button and fill in all the fields and your account type will be successfully added. Next page, please. Submit your document requirement. You'll be redirected to the special page where you can upload documents according to the list of requirements, which you can see on that page. Next page, please. You choose an account to be funded. Right on the title page, as you can see a button to the top, trading account. Also, you can use the menu of the client cabinet located from the left side in two different steps, either from the deposit section or you choose an account to be funded. Next page, please. We have a wide range of deposit methods from Visa to AstroPay to Crypto, Paya, MasterCard, Swift, both USD and European currency. Recently added StickPay, we also have Packet Money. So choose the payment system which is the best for you and works best in your region. After choosing the payment method, additional field appears with necessary amount and other necessary data. Next page, please. You click on the button to withdraw whenever you feel like withdrawing your funds. You right on the title page, as you can see a button to withdraw money. Also, you can use many of the client cabinet located from the left side. In two different steps, you can do that. When you click on the withdraw button, a new window opens for you. You choose an account to be amount you want to withdraw, currency, select the payment method, and you proceed to the next page. Next page, please. Select your payment system. You can see a list of payment systems, but they're only available for you depending on how you made a deposit or other reasons. You click on the button to withdraw your money, of course. Next page, please. Click on the bonus you want. You see a list of bonuses. We offer quite a lot. If you need to claim a bonus, just click on the bonus you want, text to learn more. You'll be redirected to the page to other chosen bonuses. Click on the bonus, you make a lot of money. You choose double your funds, make a deposit, and based on the bonus you choose, it will be doubled based on the amount you had deposited. Next page, please. Next page. Getting the bonus, you'll see a message about a successful bonus request per your request. And if the account is compatible with that particular bonus, you will get it credited. You make a deposit to receive a bonus. If margin, Yummy bonus ordered, or whatever, you wait until our team have considered your request and grant a bonus. If no deposit bonus ordered, deposit bonus will be added according to its condition instantly together with your deposit, if required, or as soon as the request has been approved. Next page. So that's all about how to get started with ZTradex services. See you guys again next week.